You don't want to be going out in the community, working yourself, building up this elaborate company, and you're making money and you're getting financial freedom, and then you get hit with a lawsuit.
I would say, do you want to be able to sleep at night and just lay your head down and know that, okay, if something happens, there's some sort of financial means to protect me and my business. And that's what insurance is, right? That's what it does for you.
Specifically, the commercial surety bonds are often misunderstood. So, what's the single most common misconception you hear, and how do you help clients navigate that?
Yeah, no, that's a great question. So I would say the most common misconception is thinking it's insurance. Perfect example is, let's take a small landscape contract, right? A landscape business. You might need commercial auto insurance to provide insurance protection for your fleet of vehicles and your drivers. Let's imagine one of your drivers gets into an accident and hits someone on the road, they damage their car, or the person gets injured. The commercial auto insurance comes in and provide that financial protection for the medical bills, but also to replace the injured party's vehicle, right? Insurance takes care of that claim versus surety bonds. If that same landscaper signs a contract for, let's say, a commercial project with a project owner, and the project owner says, hey, I need a surety bond to guarantee that this project is performed as specified within the contract. You're going to put this stuff in, you're going to do it by X date, you're going to use this material, you're going to pay all your laborers, your material men, and your suppliers. I need a bond to guarantee that, right? So now, if the landscaper fails to perform, that's when the ball is dropped. And so the project owner has the ability to make a claim on the surety bond to recoup their cost of having to get the project done. So it's very different, right? One is there to protect you against your exposures and the different hazards you have while operating your business. You're on the road, you're driving vehicles, you're putting stuff up on ladders, so you've got exposure for your workers. So if they fall at any given time, that could happen. You just don't know when. Versus a surety bond is there to guarantee that you're gonna do the thing that you said you're gonna do according to this project, or sometimes in the space of commercial surety, it's more pertaining to licensing. At times, that's relating to statutes and laws that says if you're a landscape contractor, you're gonna have this licensing, and you're gonna make sure you pay for the fees and taxes of that sort. And so it's there to guarantee that that's taken care of. So with surety, it's a three-party relationship. And within that relationship, you have the project owner, who are called the obligee. And then you have the principal, which is the contractor. And then the third party is the insurance company or the surety, which they can either be an insurance company or they could just be an entity that strictly does surety bonds. But oftentimes they are insurance companies. So they're in the same vein, but they just represent different things. They do different things. So I like to make that clear distinction. Um, and oftentimes it is a big misconception and people don't really get it.
I appreciate the breakdown. And from what you're saying, correct me here if I'm wrong, but insurance equates to protection, and then surety bonds equates to guarantee. Is that
That's a very, yeah, that's a smooth and simple way of putting it.